Hi guys, Harry Yotis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. Well, again, the high tide flag in this market persists. Okay, we're looking at a picture, a chart of the S&P 500, the SPY, and today is Thursday, the 23rd of April. This week has been caught up on the highs from Friday's move higher. The whole week we've been stuck on a short range of the highs, up and down, okay? And the big news of the day is a buzzsaw oil market. It's basically the war. You keep having news on the war. Iran is in shambles, apparently. The leadership, the hardliners want to take over the moderates. The moderates say, no, we're still in control. However, they all say they're all united, okay? So it's all about the war again. And I guess the intra-political market of Iran now is put center stage. So that's what's up and running in the headlines today. So you're getting buzzsawed in oil. You're getting whipsawed, okay? And we're going to get to that soon. But first, let's talk about the technical picture we always do. Bullish, technical picture, bullish, high tide flag at highs, nothing has changed. I'm hoping still, I'm going to keep repeating that it goes down and retest the highs before going up, or some kind of retest, some kind of market drop. I don't know. Okay, I have no idea. But so far this market still looks strong. And it looks like the market itself is discounting this buzzsaw oil market. We're seeing volatility in the war front, but the market seems not, I don't care. You're just brushing it off. Okay. So, but anyways, the technicals here, bullish. Okay, we always paired with a sentiment. Still within the middle, we're in the middle of greed, 6-6 into the greed. The momentum is extreme greed, but the others are not. We're in the greed market. Put call option still there. Still a lot of calls being bought. Nothing really alleviating. Maybe we'll see in the coming days. It's a 5-day average of the put call ratio. Maybe it goes to like neutral. Market volatility is neutral. It's trading at around 19, the VIX. Let's see what the VIX is doing. Yep, 1930. It's still elevated. That's a pretty high number. It's close to 20. 20 and above is elevated. Okay, so we're still in a very high vol environment. Okay, this is why I like to still sell options at this point, and we'll get to that soon. So the sentiment here is greedy still, but a lot more room to go higher. Okay, we're not there yet. We're not at the extreme euphoria yet because we're been coming from a lot of fear. Okay, so this is like a first 3-4 days of greed. Okay, and guys, stick around to the end, please, because I have my ideas. I did some trades today. I'm going to share it with you guys, and I'm going to give you my thoughts going forward and what I see with this market in terms of strategy. Okay, but right now we're talking about the sentiment. We have the fear and greed still at greed. Just started to get into the greed area. And of course, on Thursday, we have the AAII Investor Sentiment Survey, which I like. And now we're starting to get the retreat of the bears and bulls coming in. The first week of extreme bullishness, 31 to 46, that's huge jump in 1 week. And the bears have pulled back, although still above the average of 31. This is the average. The average is 37.5 for bulls, way above it. We got the bullishness, but the bears are still average to lingering in there. Okay, first week. Okay, which is good. I like this. I want to see this though for like 6 weeks, 4, 5, 6 weeks, like 4, 5, 6 weeks, like we saw the bears during this downturn. We've had weeks of that. Okay, 2-3 weeks. So I want to see more euphoria in this market. We're just starting to get the bullishness. And I think that if we pull back, we're going to get these guys coming all the way back down. Very, very skittish because we never got rid of the bears. There's still a lot of bears lingering. And the bullishness is like they're just tipping their toes in the water. Okay, the bulls are just tipping their toes in the water. They're not very confident of this move. And okay, wall of worry is still there. Okay, even though we're bullish. So there. We have the investor sentiment survey is starting to become bullish. These guys are starting to become greedy. That's nice. We're getting the first step. It's still not enough for me to stop my bullishness. I still think we're good. And speaking of that, we had a lot of macro data, not a lot, but one macro print that we look at. And that is initial jobless claims. They came in at 214,000. It's still low. We keep telling you guys, the macro data is not rolling over. The market is doing well. We also had some news on the ISM, not ISM, but a manufacturing survey, PMI, but for the S&P Global. But I don't look at that, but that also is expanding. It just confirms the fact that the economy is well. It's not hurt, it's not ailing, it's not dying. It's still doing very, very well. Okay, so let's get to our main event and what I think and how I am positioned going forward and what I think will happen going forward. Okay, this is a buzzsaw oil market thanks to the war. If we go to the zero hedge, which I like to go, you can go to anyone. It's pretty much the same thing. Okay, stock slide, oil surges on Iran war fears. Okay, so Trump asked how long we'll wait for Iran. He goes, "Don't rush me." So it's basically like, and then we also have here breaking. The IRGC is limiting authority. Aragachi, the main negotiator, and Galibaf are negotiators, and they continue to talk to the Americans, but without the power to commit or guarantee anything. Okay, so it says that a rollback from previous understandings regarding 60% enriched uranium, they're rolling that back. So the message is that Tehran, they're open to talking, but they're not open to making any commitments yet. So it's like, if you guys read it more, if you want to click on the link here, it'll tell you that the IRGC and the hardliners are fighting with the moderates, like intra-political drama going on in Iran, apparently. Okay, this is according to Dror Balazada. I don't know what that is. But the point is that the news here, everybody's looking at the oil market and the war. However, on CNBC, look at the top topic of the day is Microsoft plans first ever voluntary employee buyout for up to 7% of US. Okay, so look, these stocks reporting earnings. It's all about earnings, Intel. We'll get to Intel shortly because I did a trade on it. But look at the mainstream media. It's not even focusing on the war. Okay, this is the point I'm trying to say, that they're looking past it. They're not really caring about the war. The market's fundamentals are taking over, which is good. You want to see that. So any pullback is a sign for me to buy. However, you don't see that in the oil market. Okay, the buzzsaw oil market is for real. Look, let's get to oil. This is the biggest thing that we want to talk about today. Oil back up today. It's up 4% WTI. I'm looking at WTI, basically spot market. Okay, and I was hoping as we were going down here, we were saying that as the market broke here, don't short. We don't want to short. We mentioned in previous videos, we don't want to short when things are breaking down. We want to short when they have the rebound. Okay, and I was hoping the market would come back because I'm hoping that we get some kind of like, how would I put it? Let me draw it for you guys. Like a shoulder, head and shoulders type of thing, but I need that second shoulder. So I was hoping oil pumps up to maybe the 100 level, the 9900 level, something like that, because then we have a head and shoulders. We have the fundamentals, which are, oil is going to be plentiful when the war is over. And then if it rolls over, then we have a head and shoulders. And what does that mean with the head and shoulders? Well, we have a neckline here, let's say around the 85. Okay, if that's the case and we have a neckline, the measured move of this head and shoulders would be the top, which is, let's say, 117 to 85, but now on the downside. Okay, so if you flip it over, it gets down to like the 55 level. So the technicals, like the measured move would be down to like 55, which is what we are expecting. We don't know how long it's going to take. The timing is not there. But if we do get this head and shoulders and starts breaking, even if it starts breaking from here, we have like a mini shoulder. Starts breaking down here, maybe a couple of days before it starts breaking down. Who knows? This is just conjecture. We don't know. But if we do get this, we get the measured move down to 55, which is what we were expecting. Okay, so that's what I wanted to show you guys in the oil market. I suspect that the volatility in oil is not being reflected in the SPY, because it's it's telling you how strong the SPY is. It's like looking past this. It looks 6 months ahead. It's basically telling you that the war is going to be over within less than 6 months. So oil just doesn't know it yet. So I think it gets monkey hammered and eventually comes down to 55. I don't know how the pattern is, what the intraday moves are. However, if the war starts back on hot and we go back to what we were before, yeah, it's all over. But we're just playing the odds. Chances are that it's going to be over. And I'm on the side that it's going to be over with some kind of deal. I don't know how so. Okay. But that's why you have to have a longer term view on this play. It's not a week thing. It's not a days thing. Okay. So that's my thought on the oil market. So let's get back to SPY and what I did today, guys. My thoughts. You got a bit of my thoughts, meaning that despite the buzzsaw oil market and the war going nuts, up and down in oil, look how steady the bull market is. Okay, it went down. The market went down. If you see the wick, but then it closed barely down. Okay, and we have CNBC here saying that not one mention of the war, where zero hedges, everything is about the war, and other outlets are all about the war too, but you know, CNBC decides to talk about earnings of Microsoft. Okay, so that's a sign that they're just looking past it. Okay, and I did a couple of trades today. Okay, the first we mentioned yesterday about me missing the Tesla trade. Okay, I wanted to enter a trade where I would short the 350, 330 put spread. Okay, I didn't get a chance to enter because I got too nitpicky. But after today, I decided to enter a trade where I did a strangle. Okay, I did a strangle on Tesla. Let's get to the put options here. Tesla. Okay, it's a non-directional trade. Okay, Tesla, I did it June expiry. I did the 335. I sold the 335 put, and I sold the 465 call. Okay, well, it's $12. It was, but I got it for $10.80. Okay, so I'm losing money in it as we did because I did it in the morning. Okay, so as we speak, this trade is against me. However, if you look at the chart, okay, we'll just draw it here. You can see 465 here minus a call, and 325 minus a put. You see how the skew is like very close. This was a 16 delta strangle, meaning that this is the expected move, a 1 standard deviation expected move. Okay, look how high. Everybody was expecting an up move, so the calls were very, very expensive. This is why I wanted to enter a strangle and not just go on the short side. Okay, this gave me a chance to profit. Okay, I pocketed almost $11 of premium, and if it goes against me here, I'll manage it. I'll keep you guys up to date. But so far, telling you that the market is scared that Tesla would rip to the upside, so I want to take advantage of that by selling that call. Okay, so this was the trade that I did. 325s, 465. Okay, selling, capturing premium, and I did it in June expiry, so all the way here, which is like 56 days to expiry. So I have time for I'll manage it before, but I have time for the option premium to decay, and I can collect X amount of my premium going forward. Okay, that is my plan. Okay, and the other trade that I looked at and I told you guys about was Intel. I told you that I was planning on doing the same thing, a straddle on Intel after this move, and you can see after hours they announced earnings and it went up. Okay, now it's trading at 77. It closed at 66. So this is look at the chart, very, very bullish. It broke up to new highs now. Okay, it was at highs and now it's breaking up to new highs. These, like CNBC said here, okay, where is it? Intel stock soars 15% as results, top estimate. All the semiconductors are doing very, very well. Okay, so what I did is I sold a put and a call, same thing. But this time for Intel, I shorted the 88 call. I wanted to short the call because they were expensive. So I shorted the 88 call and only the 55 put. Look how far away from it. Okay, look how close the put was compared to the call. Again, skewed. Everybody was scared. Everybody was expecting a move to go higher, so they priced the options, the call options higher. Okay, and they're pretty right. They're getting close to that. However, for these guys, I did it on the expiry was a weekly. I did the May 29th. So by May around here. So by May 29th, which is not that far away, like 35 days or so, I expect this premium to decay very, very fast. Okay. Yes, it's trading at $77 after market today, but you don't know where it'll open tomorrow. It could even here higher or even lower. Remember Tesla yesterday? Tesla was trading at like over 400, like 407-ish yesterday. Okay, and it opened down. Okay, so you don't know where it opens. The risk is to the upside risk, meaning that market participants expect an upside move as they do with Intel. That's why I wanted to go this is a delta neutral. Okay, so I'm neither long. I expect neither long nor short on this, but I wanted to add more short exposure by having the call on both ends because I'm long, generally speaking, and I want to have some kind of short exposure. Okay, so if this gets tested, we'll see. I'll have to deal with it. And remember, with these trades, you go small. You don't go big. You want to go small and go often. You want to. There's a lot of earnings trades that you could play. You can do this. You can wait till after the earnings before something happens, and then enter a trade. It's all up to you. It's very, very flexible. However, what you want to do is you want to go small so you can survive and repeat. Okay, so that's it, guys. I'm telling you what I did. I entered 2 trades. One post earnings with Tesla. Oops, I have to get rid of that one. One post earnings with Tesla. And the other one, pre-earnings with Intel. We'll see how it goes tomorrow. And the buzzsaw oil market. The SPY is basically ignoring the oil market and the war. We'll see if that's a good idea going forward. I think it just gives you a sign that they're looking past the war going forward. A deal might be made. Okay. All right, guys. We'll see what happens on Friday, the end of the week. And that's it. Have a good day.